The semiconductor sector is just booming right now.
Oh, it really is.
Global sales. I mean, they hit $166 billion in the third quarter of 2024,
Oh, well.
and that's a 23.2% jump from the same time last year.
Really?
Yeah, and a 10.7% increase from just the previous quarter.
That's impressive.
Yeah, it's some pretty remarkable growth.
And when you look at the regional breakdown, it gets even more interesting.
Oh, yeah. Like what?
The Americas, for example, they saw a 46.3% surge year over year.
Wow.
Yeah, and, despite all the talk about a slowdown,
Right.
China continues to see really strong growth as well,
Mm-hmm.
with a 22.9% increase.
So even with predictions showing growth slowing to around 14% in 2025.
Right.
I mean, that's still really significant.
Well, absolutely.
Especially compared to other industries.
Yeah.
What's driving this continued success?
Well, a few key factors are at play.
Okay.
First, supply chain issues, which have been plaguing the industry for a while now, are finally starting to ease. This means companies can finally start ramping up production to meet that incredible demand,
I see.
especially for GPUs, which are essential for all those AI applications everyone's talking about.
Right.
And then plus, we're seeing these massive investments in chip manufacturing, both domestically and internationally.
So it sounds like investors have plenty of reasons to be excited about the future of semiconductors.
I think so.
So we've got a list of 7 specific companies that are especially well positioned to benefit from this positive outlook.
Oh, okay. Sounds good.
Where should we start?
Let's begin with the company that's been making headlines all year, Nvidia.
Oh, yeah?
Ticker symbol NVDA.
Uh-huh.
Their stock price has surged a mind-blowing 195% in 2024 alone.
I know. It seems like everyone's talking about Nvidia these days, and for good reason.
For very good reason.
Yeah.
Their recent Q3 earnings report showed a 94% year-over-year increase in revenue.
Really?
Yeah, and a big reason for that is their dominance in the AI chip market.
Right.
They currently hold a 90% global market share.
90%. Wow. No wonder analysts are predicting a 27% rise in AI chip revenue next year.
Makes sense.
Yeah.
And then also their data center division is seeing some phenomenal growth. Revenue in that segment has doubled to a staggering $30.8 billion.
It's clear why analysts at firms like Loop Capital are so bullish,
Yeah.
giving the stock a buy rating with a $175 price target.
Right.
Even the CEO of SoftBank, Masayoshi Son, has publicly stated that he believes Nvidia stock is undervalued.
It'll be interesting to see if they can sustain this incredible momentum going forward.
Yeah, now let's look at another major player, Advanced Micro Devices, or AMD.
Okay.
Now, their recent stock performance paints a different picture,
Oh.
down 6.7% year to date. That might seem surprising given the sector's overall growth.
Yeah, at first glance, it is a bit of a head-scratcher, especially when you compare it to NVIDIA's performance.
Right.
However, if you look at their 2-year compound annual growth rate,
Okay.
it tells a different story.
Okay.
Sales per share are up 25.3%, and earnings per share have jumped an impressive 46.7%.
So despite the recent dip, there's clearly a lot of potential there.
There's without a doubt.
Okay.
AMD is actively working to strengthen its presence in the AI data center market.
What are some of the moves they're making?
Well, they recently launched their Instinct GPU data center, and sales of their EPYC CPUs have been very strong.
Right.
And they've also been making strategic acquisitions to boost their AI capabilities.
Look who.
Well, they acquired Silo AI, which is a European developer of AI systems, for a cool $665 million.
Wow.
And shortly after that, they snapped up ZT Systems, a computer hardware design company, for $4.9 billion.
So they're clearly putting their money where their mouth is when it comes to AI.
They are, and analysts are taking notice.
Okay.
A whopping 81% of analysts who cover AMD have issued buy ratings with a consensus price target of $185 per share.
Okay, let's move on to Taiwan Semiconductor Manufacturing Company, or TSM.
Right.
They've had a truly remarkable year, with their stock price up an astonishing 83% year to date.
They really have. A major factor in their success has been the CTPS and Science Act.
Oh, right.
TSM received a $6.6 billion government subsidy to build a new manufacturing facility in Arizona.
That's huge.
It is, and that's not all. They've announced ambitious plans to build 10 new chip factories by 2025.
Wow.
Including one that's nearing completion in Kumamoto, Japan.
Wow, that's some serious expansion.
And analysts seem to be just as optimistic as the company itself.
Okay.
Barclays recently raised their price outlook for TSM from $215 to $240 per share.
Now, for something a little different, let's talk about Synopsys.
Okay.
Ticker symbol SNPS. They operate in a slightly different space than the companies we've discussed so far.
That's right. Synopsys specializes in something called electronic design automation,
Okay.
which put simply means they create the software and tools that allow other companies to design semiconductor chips faster and more efficiently.
So they're not actually making the chips themselves.
No, but they play a crucial role.
I see.
Their technology is essential for the companies that do manufacture chips.
That's an interesting niche.
Yeah.
How is Synopsys positioned for the future?
Very well, actually. They're expected to report their third quarter earnings soon,
Okay.
and analysts are projecting a solid 3.8% year-over-year increase in earnings per share.
And are analysts optimistic about their long-term prospects?
Yeah, several have issued positive outlooks.
Like,
Well, Loop Capital has a buy recommendation on SNPS with a $675 price target, and Piper Sandler has given them an overweight rating with a target of $670.
what's driving this optimism?
Well, the increasing demand for advanced silicon chips, which are essential components in everything from artificial intelligence and the Internet of Things to 5G networks, this demand is a major tailwind for Synopsys.
Okay, next up, let's talk about ARM Holdings ticker symbol, ARM.
All right.
Their stock prices jumped an impressive 78% in 2024, driven in large part by the data center and AI boom.
Yeah,
But they don't actually manufacture chips themselves, right?
that's correct. Their business model is based on licensing their CPU designs to tech giants like Apple and Microsoft. And those companies then incorporate those designs into their products.
So they're kind of like the architects of the chip world.
Yeah, I like that analogy.
Uh-huh.
While they've historically been strong in the smartphone market, they're now rapidly expanding into data centers and personal computing, which makes sense given the current trends.
It does, and it seems like they've got some powerful allies in their corner.
Definitely, they have close ties with Nvidia.
Right.
Remember, Nvidia tried to acquire ARM Holdings before their IPO,
Uh-huh.
but regulators blocked the deal.
Oh, yeah.
However, Nvidia remains a major investor in ARM, and they're also a significant customer.
Okay.
Other major clients include Amazon and Qualcomm.
So that failed acquisition attempt speaks volumes about how valuable ARM Holdings is.
I think so. Another factor driving their recent success is Apple's decision to start using ARM processors in their new line of AI-powered smartphones.
Wow.
That's a major win for ARM Holdings.
Okay, let's turn our attention to a company that's had a much tougher year. Intel,
Okay.
ticker symbol INTC. It's been a rough one for them, to say the least.
It has. 2024 has been a challenging year for Intel. Their stock price is down 52% year to date,
Wow.
and they were even dropped from the Dow Jones Industrial Average.
Oh, wow.
They've had to make some difficult decisions, including laying off 15,000 employees and suspending dividend payments.
That's never easy to see, but is there any light at the end of the tunnel for Intel?
There might be. There are some signs of a potential turnaround story brewing.
Okay, like what?
Well, for one, they secured $8.5 billion from the SHIE EPS and Science Act to build 4 new manufacturing plants in the U.S.
So they're making a big bet on American manufacturing.
They are, and perhaps even more exciting is that they're gearing up to release 3 brand new CPU chips. Granite Rapids, Sierra Forest, and Clearwater Forest.
Okay.
Analysts are eagerly awaiting these new chips, and there's a lot of hope that they could be the catalyst for a major rebound for Intel in 2025.
Let's hope so. Finally, let's wrap up our discussion of these 7 semiconductor stocks with Qualcomm,
Okay.
ticker symbol QCOM. They've had a bit of a roller coaster ride recently.
Their stock is down 9.9% over the past 3 months,
Okay.
which has tempered their year-to-date gains to a more modest 8.4%.
So still a positive year, though, not as stellar as some of the other companies we've discussed.
Correct. One thing that might make investors feel a bit better is their 2.2% forward dividend yield.
Okay.
What's interesting about Qualcomm is that they're in the midst of a strategic shift.
Mm-hmm.
They're moving away from being primarily a smartphone chip company to becoming a broader chip developer, targeting a wider range of markets.
So they're diversifying.
Precisely. And they've got some aggressive revenue projections.
Right.
While they're aiming to generate $4 billion from the personal computing market by 2029.
Wow.
And see significant growth opportunities in the Internet of Things, artificial intelligence, and even automotive and transportation.
That's a bold vision.
It is, and some analysts believe they can achieve it. Kevin Cassidy from Rosenblatt Securities has a $250 price target on Qualcomm, reflecting his confidence in their future.
Yeah. Qualcomm's diversification strategy will be interesting to watch.
Yeah.
The personal computing market is dominated by some pretty big players.
Yeah, for sure. It is a bold move for them, but it's smart of them not to put all their eggs in one basket.
Exactly, especially in such a dynamic industry.
Right.
Now that we've taken a close look at 7 individual companies, it's worth kind of zooming out and considering the broader industry trends that are shaping the future of semiconductors.
Yeah, I agree. It's easy to get caught up in the excitement of specific companies, but understanding the larger context is so crucial for making informed decisions.
Absolutely.
So let's talk big picture for a moment. What are some of those major trends that investors should have on their radar?
Well, one trend that's been driving the industry for decades is Moore's Law.
And this observation states that the number of transistors that can be packed onto a microchip doubles approximately every 2 years.
Okay, I've definitely heard of Moore's Law, but to be honest, I don't fully understand it.
Sure, it's a bit technical, but essentially it means that we've been able to steadily increase computing power
Okay,
while simultaneously shrinking the size and the cost of electronics.
I see.
However, maintaining this pace of miniaturization is becoming increasingly challenging and expensive.
So is Moore's Law reaching its limits?
That's a question that's hotly debated in the industry. Some experts believe we're getting close to the physical limitations of how small we can make transistors.
Right.
Others argue that new materials and manufacturing techniques will allow us to keep shrinking them for many years to come.
Okay.
It's a fascinating debate with huge implications.
Yeah, absolutely. What are some other major trends that investors should be aware of?
Oh, the explosion of artificial intelligence is a total game changer. AI algorithms require immense processing power, which has created a surge in demand for specialized chips like those GPUs we talked about earlier.
Right.
Nvidia's current dominance in this space is a testament to AI's crucial role in the semiconductor industry's growth.
It sounds like there's plenty of room for other companies to get in on the action, though.
Oh, absolutely. Companies like AMD, Intel, and Qualcomm are all pouring resources into developing their own AI chip technologies.
Okay.
It's a fiercely competitive market, and I expect to see a lot of innovation and new players emerging in the coming years.
So keeping an eye on the AI chip landscape is a must for anyone interested in investing in this sector.
Definitely. Now, another trend we touched on earlier is the increasing demand for data centers.
Right.
As more and more of our lives move online, the need for these massive data storage and processing facilities just keeps growing.
And all of those data centers require a huge number of semiconductors to function.
They do. Companies like Taiwan Semiconductor and Intel are major suppliers of the chips that are used in data center servers. The success of these companies is closely tied to the ongoing growth of the cloud, so that's another important area to watch.
It's amazing to think about the scale of those data centers and the sheer volume of information they're processing every second.
It really is mind-boggling, and the demand for data centers is only going to intensify as trends like the Internet of Things and the rollout of 5G networks continue to accelerate.
Speaking of the Internet of Things, that's another trend impacting the semiconductor industry in a big way.
Yeah, you're right. It seems like every device these days, from smartwatches and fitness trackers to refrigerators and even cars, is connected to the internet.
Right.
And every single one of those connected devices relies on semiconductor chips to function.
So what does that mean for chip makers?
Well, as the number of connected devices explodes, so will the demand for chips. It's really a simple equation.
I see your point. Are there certain types of chips that are particularly important for the Internet of Things?
Yes, low-power microcontrollers and sensors are key components of most IoT devices. They're designed to be very energy efficient and compact, which is crucial for battery-powered gadgets.
And what companies are well-positioned to benefit from this demand?
Well, companies like ARM Holdings, whose business model revolves around licensing its CPU designs to a wide range of manufacturers,
Right.
they are likely to see a lot of growth from this trend.
It sounds like there are opportunities for investors across a whole spectrum of semiconductor applications.
There really are. The semiconductor industry is incredibly diverse and innovative. Companies are constantly pushing the boundaries, creating new chips with ever-increasing capabilities.
So for investors who are eager to jump into this sector, what are some key things to keep in mind?
First and foremost, thorough research and due diligence are absolutely essential before investing in any company.
Okay.
You need to understand the company's business model, its competitive landscape, its management team, and its long-term growth potential.
I imagine that's especially important in a fast-paced, complex industry like semiconductors.
It really is. It's also crucial to stay informed about technological advancements and industry trends.
Right.
The semiconductor landscape is in constant flux, and the companies that can adapt and innovate will be the ones that thrive.
So far, we've been focusing on the positive aspects of the semiconductor industry.
Yeah.
But what about the potential challenges or risks?
Well, every industry has its challenges, and semiconductors are no exception.
Sure.
One risk that's always looming is geopolitical instability.
Okay.
We've seen how events like trade tensions, regional conflicts, and natural disasters can disrupt global supply chains and
Right.
impact production.
Yeah, the ongoing trade tensions between the U.S. and China are a prime example.
Exactly.
Those tensions could easily spill over into the semiconductor market.
Exactly. Another challenge to keep in mind is the cyclical nature of the industry.
Yeah.
Demand for semiconductors tends to ebb and flow based on factors like global economic growth and consumer spending.
Right.
Companies need to be able to navigate these inevitable cycles to maintain long-term success.
So even in a booming sector like semiconductors, investors need to be aware of the risks.
Absolutely. It's important to approach any investment with a balanced perspective, weighing the potential rewards against the potential downsides.
Okay, so we've explored the major trends shaping the semiconductor industry. We've discussed 7 specific stocks that look particularly promising
We have.
and highlighted some of the potential challenges.
Right.
What's next?
Well, we've covered a lot of ground, but remember, this is just the tip of the iceberg.
Right.
The semiconductor industry is vast and constantly evolving, so there's always more to learn and discover.
Yeah, that's what makes it so fascinating. It's an industry that's driving innovation across so many different sectors, from artificial intelligence and cloud computing to the Internet of Things, autonomous driving, and beyond.
You said it's an exciting time to be following the semiconductor industry.
I agree. Before we wrap up, there's something that's been on my mind.
Okay, I'm listening.
We've talked about all these amazing advancements in semiconductor technology, and it's clear that they're having a profound impact on our lives.
Yeah,
But what about the potential downsides?
that's a question that we should all be asking ourselves.
Yeah.
As technology continues to evolve at an accelerating pace, we need to be mindful of both the positive and negative implications.
For example, there's a lot of discussion these days about the potential for AI to automate jobs, potentially leading to widespread unemployment.
That's one concern that people are grappling with, and it's important to have these open and honest conversations about the potential consequences.
Right.
We need to find ways to harness the power of technology for good while mitigating the risks.
I think that's a really important point to make.
Technology is a powerful tool, but it's up to us to use it wisely and responsibly.
That's a great point to end on. As we wrap up our exploration of the semiconductor industry, I'm feeling both incredibly excited about the future and a little cautious about the potential downsides.
I understand that feeling. It's a bit like standing at a crossroads.
Yeah.
The choices we make today, both individually and as a society, will have a major impact on how technology shapes our world tomorrow.
So what can our listeners do to stay informed and engaged in this crucial conversation?
Well, I encourage everyone to stay curious,
Okay.
to keep asking questions, and to learn as much as possible about the technologies that are shaping our lives.
Right.
There are a wealth of resources available online, in libraries, and through community organizations.
That's a great suggestion. And don't underestimate the power of conversation.
Oh, absolutely.
Talking to friends, family, and colleagues about these issues can help us all gain a better understanding of the complexities and the different viewpoints.
I agree. Those conversations are essential for building a more informed and engaged society.
I think we've had a really fascinating and thought-provoking discussion today.
I agree.
It's certainly given me a lot to think about, and I hope our listeners feel the same way.
I agree. It's been a pleasure exploring the world of semiconductors with you, and I'm excited to see what the future holds.
And as always, we encourage our listeners to continue exploring on their own.
Yes.
The semiconductor industry is full of surprises and opportunities for those who are willing to dig a little deeper.
Yeah, it really is.
So as we wrap up our exploration of semiconductor stocks, what's one key takeaway you hope listeners will remember?
That's a great question. I think the biggest takeaway is that the semiconductor industry is not, a monolithic entity.
Okay.
It's a complex and dynamic ecosystem with a wide range of companies pursuing different strategies and targeting different markets.
That's a really good point.
Yeah.
We've covered everything from chip manufacturers like Taiwan Semiconductor and Intel to design specialists like Synopsys and even companies like ARM Holdings that focus on licensing their intellectual property.
Right. And each of these companies faces unique challenges and opportunities. Investors need to understand these nuances to make informed decisions.
It's not just about picking the hottest stock of the moment.
Now, it's
It's about identifying companies with solid fundamentals, a clear vision for the future, and the ability to execute on their plans.
I couldn't agree more. And that requires doing your research, understanding the industry trends, and keeping a close eye on the competitive landscape.
So it sounds like there's no magic formula for success in semiconductor investing.
Definitely not. It's about patience, discipline, and a willingness to learn and adapt as the industry evolves.
And maybe a little bit of luck, too.
Perhaps.
Yeah.
But I believe that informed investors who put in the effort to understand this complex industry have a much better chance of finding those hidden gems and riding the next wave of innovation.
Well said. It's been a fascinating conversation. I've learned so much about the semiconductor industry, and I hope our listeners have too.
The pleasure was all mine. Thanks for having me.
And to all our listeners out there, keep exploring the world of semiconductors. It's an industry that's shaping the future in countless ways. And we'll be back next time with another deep dive into a fascinating topic.